Track record matters. It matters for investors. It matters even more so to newsletter writers. Over the last year and a half, I've presented 8 ideas to the crowds that have been listening, and this is the performance. And FPX Nickel is in the positive territory too. So that's 7 of 8 companies that have performed exceptionally well with an average return, especially now after this latest blip, well over 100%. And newsletter the subscribers have benefited even more, with last year over 150% average weighted gain, and this year to date we're up over 260%. Precious metals, we're 100% in a bull market. I would say definitely in the first half, not the second. Really, to have benefited the way, especially our portfolio has over the last couple of years, you had to be positioned in 2022, 2023. To set you up for those gains. And really the people that made money last year were in sort of those best of best companies. And then of course this year we're seeing sort of a tide that rises all boats, but I still think quality matters. And although you can get mesmerized about a bull market and buying junk, you don't want to get in that habit, because we're typically have more bear market or sideways years than we do up. I think precious metals, if you're going to pick one sector to be in, that this is what you want to be in: gold and silver, but primarily gold. I think all the factors that were in place are still in place for at least maintaining this gold price, if not going much higher. We saw what the Fed rate cut has done to the precious metals sector, and I think that's just the first of many more. The society is who votes in our governments. And so it is a direct reflection. The spending is a direct reflection of what society wants. And I don't think we're going to see any major changes in terms of debt. There might be a lot of talk about tightening things up, but in reality, we're going to meet any trials and tribulation with more stimulus. And again, the debt's just going to keep on rising up. I'm 43 years old. This is probably the most tumultuous in terms of potential world war I think we've been in my lifetime at least. And whether it's the Middle East, whether it's Russia, Ukraine, whether it's tensions with China and a number of other countries, I would say we're right in sort of that, what could be a precipice to something much bigger. And again, something that will probably drive people to safe havens such as gold. The inflation, like I said, society votes in governments. They sort of dictate what's going on. Again, I don't see spending dying down anytime soon. So I think a higher cost of living is in the book. And again, that is good for gold. And finally, the performance of the gold price and then now the equities has definitely started to attract the generalist investor, I would say. And you're starting to see the gold market pick up momentum, which is so characteristic of how bull markets work. And that's why I think, given the background of why I think the gold price is going to go up, or at least stay here, that's where you're going to catch that momentum. Although the value proposition, I would say, in terms of the companies that you're going to invest in, is definitely not as good as it was last year, and it's way off where it was in 2023. And also, you're seeing a trickle down to exploration. You're seeing a lot of exploration companies that have decent targets starting to garner higher market caps, and this shows you the risk appetite is increasing. Again, another sign that we're in a bull market. And then finally, I think that anybody that tells you that you're dumb or stupid for taking profits in a bull market, I think you should really question them. And you have to take profits in this business. Buying at the right price is super important. But over my career, what I've learned is that selling is just as important or even more important. You have to take money off the table. You have to take it out of this market, especially the juniors, and you have to put it into real things in your real life. And that's something I've learned and I will stick to. And again, the bull market's going to run. And yes, you do have to let your winners go and ride that tide. But you have to decide for yourself when you're going to take money off the table and take it out of the market or put it into something cheap. So the framework for value investment is pretty simple. You can see with precious metals, it was the contrarian play in 2023 and how it's developed over the last 2 years. I think copper is going to be the next metal. If I were to pick one, that would be my bet to be in the next move upwards. But the framework for value investment is quite simple. You want to start with the price to value ratio. So you want to look for companies that are selling for less than their worth. Then you have to have the courage and the patience to not only buy it, but to hold it, to not only till the catalyst that you have outlined sort of come to fruition, but also in hopes that you get the sort of the metal price right for that gravy uptick for profits. And again, it always holds true that you want to align yourself with good management, with good projects and access to cash. The access to cash is such a big deal, especially for metals that are out of our favor. If these management teams are going to be able to execute on their action plans, they need access to cash. So that's something you got to look for. So I do believe copper is next. I think a lot of the same things that are driving gold will drive copper, but sort of in a sort of derivative way. So usually we see the precious metals start the bull markets, and that's exactly what we're seeing. But that quantitative easing or the lowering of interest rates coincides with basically market stimulation. So things aren't that great, and so the Fed or the government has to lower interest rates and put stimulus out into the market. Whether it's deals like MP Materials in the States, or I bet a whole other plethora of companies that they're going to, or Lithium Americas is the latest, you're going to see a bunch of these deals, and it's going to be across the board. And I think copper is going to be a big part of that. I think, seeing AI and how it's involved in everyday life, my life, and I would guess a portion of this audience, I think we're really discounting how big of a change AI is going to bring to humanity. I truly think it's going to be something bigger than the internet, and we don't necessarily know where that's headed, and obviously have to be ultra careful. But on the demand side for copper, I think we're underestimating what these data centers are going to mean, not only for energy production, but also that infrastructure to carry that electricity. The green narrative, I think, is mostly baloney. The extreme goals, 2050 or 2030, are ridiculous. But I think it mostly stays intact. I think for a good portion of people, they want lower carbon lives, whatever that means to you personally. So I think that's going to stay intact. It just may not be the overriding narrative it was for, let's say, the prior 3 or 4 years. And then finally, political risk. When I talk about political risk and I talk about base metals, it's, of course, war can bring tightness to markets. But what I want to say is it's mostly related to me in security of supply, whether it's mine supply, but probably even more so on the refinement or the end product secure, that you're going to see more and more nations take this seriously and want to do what the States has done and put tons of money into the markets. When you come to the copper market in particular, in my view, it's more of a story of concentrate versus refined supply. I think the treatment charges that we've seen over the last year and a half are evidence that the availability of clean concentrates are getting scarce. And I think that only ramps up when you put together all of these more like macro economic data points that I covered. So I think that's going to be really, and it may not be as evident to the market yet, but I think that's where we're going to see a big inflection point. And the same comes with water supply. Again, Chile is one of the largest producers of copper worldwide as a country, and they have the most stringent water extraction legislation that you'll see. Essentially, you can't take any more groundwater out of the water table. You're going to have to go to get a maritime concession to take it out of the ocean, and in many cases, desalinate it. The companies that have that maritime concession, I think, are going to be well ahead of the market. And I think when you mix that in with the fact that lower grades are becoming synonymous across the sector, like the 0.7s, the 0.8s, the percent copper deposits that we had 20, 30 years ago are now the 0.4 and the 0.5s. And with that, there's a correlation to more water usage. So this becomes a bigger and bigger story as we move along. And then finally, the copper market still hasn't found a replacement for Cobre Panama's 1% that we lost, I guess, now 2 years ago. And that's problematic. That doesn't get filled in 1 or 2 years. That's like a decade or 2-decade type of thing. The other thing is when comparing, I'm constantly comparing company valuations. That's what I do. I'm an analyst. I look across the sectors. I'm a bottom-up guy, so I'm always looking at companies first. And I'm telling you, the NAV or the opportunities are certainly in the contrarian metals, the ones that are sort of out of favor. I'm not necessarily saying that copper is contrarian, but what I would say is there's a ton of value that is there with quality companies, and that's what I want to take advantage of. Specific stories are garnering attention. You look at A-Mark's Aurora discovery, great discovery, their market cap suggests that people are paying attention. Then you're seeing development. There's some projects and people that are garnering attention. And to me, it reflects a lot what like 2024 was, where specific companies are getting recognition. And it's sort of that setup where what I think is going to be higher copper prices and then sort of that bull market move with the rest of them. The junior stock of your premium portfolio, we've added 4 companies in 2025. The 2 companies presenting with me. So 2 copper developers and 1 polymetallic explorer. And then I added a new copper pick this week. Copper company valuations, and these calculations are mine, nothing to do with the company. So Surge Copper, one of the presenting companies, so only considering Berg, there's more to Berg, or there's more to Surge than just Berg. But if you look at Berg, to me, and by my calculation, you're getting a price to value ratio. It's basically selling for 2.25% of NAV, which is extremely cheap. If you listened to me in May, I brought up Hot Chili and I walked you through why I think it was so discounted. If you consider Costa Fuego, if you consider what La Verde might mean to that mining operation in the future, and no value put on the water project that they have, they're selling for 6% of underlying value. And this is a company that's got a PFS in the bank. They're headed towards feasibility study and probably a construction decision in the next 2 years. And they're selling for 6% of NAV. It's very cheap, in my view. You can't predict markets. Like I said, I'm a bottom-up investor. I look at the companies, and while I take opinions on where metal prices might go in the future, I don't invest because of that. I invest because of the management teams, because of the actions or the catalysts that they might have in place and the way that could garner attention from the market. And I think the vast majority of investors should do the same thing, but bottom up isn't as sexy as the top down, meaning people get attracted to a metal and then try to find a company based on that. Metals markets are complex. Metal prices, I think, you cannot predict them consistently over a period of time. The best commodity traders who have all the information hedge their bets. So it really surprises me when people are so convinced that they know where a metal price is headed. Lastly, not understanding what you own can be deadly. And so I get asked a lot, I own X and X company. Should I sell? Well, you should have an idea before you buy. For me, again, buying is super important, but so is selling. Before I buy a company, I have an idea of where I want to sell it. If nothing else happens, I know the price target. I know where I want to sell this thing. And if X and Y happen, I'm going to sell it. And I think investors should adopt that same sort of mentality. And it can look many different ways. But you should have a price target. You should have an idea of what you own. That chart on the right there, that's an actual price chart. And you can see the run up to 11 cents and the precipitous fall down to 5 cents. And I think in a lot of cases, people sold this out of fear. They wanted to get out. That share price, and this is real, moved from 5 cents to 45 in the ensuing months. And this is average silvers. And then you can see over about a year and a half, it went from 5 cents to 70 cents, and it's gone much higher ever since. But you can see that everybody was saying, the bull market's over in September 2020. And for the most part, it sort of was. But you have companies that are of exceptional quality, including Abra, that continued to go up because of reasons related to the company, not the market. Group 11, around $100 million market cap, probably about what it's trading at today. Just raised around $6 million in July. I participated in that placement. The projects are located in Ireland. Strong infrastructure, mining friendly, access to the European market. And to me, the main project is Ballywire. And you see Ballywire is located basically at the confluence of the Limerick and Rathdowney trends. And usually geologically, when you have these trends meeting, it's usually at that meeting point where you can find some really interesting stuff. And I think in this case, they have. And strategic investors, Michael Gentili, which is great. But I think more important is Glencore. The value underpinning, we bought this when it was around a $40 million market cap. It's up around 150%, a great return in a short amount of time. And that's based off the Ballywire drill results. But you have some value underpinned with Stone Park and Ballinac. And that's what I think underpins probably the market cap under 50 million. So you get all that speculative upside in the other drill targets that they have. And Bart will take us through that. Ballywire, some of the best intervals I've seen in a long time, 39 meters, almost 10% zinc equivalent, 131 grams silver, got some copper in that too. You go down the line, you can see the stacked mineral horizons that they've identified. It's basically about a 2.5 kilometer trend, and they just had results out this week that would show, I think, that they probably extended that by another kilometer. So this is really stacking up to be something quite interesting, and that's where the exploration upside is in that northeast extension, the deeper copper silver horizon in the calcite zones. And then you've got some germanium and antimony, which are part of the story, and really what I would say are the gravy. They don't necessarily need that, but if they can get it, that's going to be gravy on top of the already, what I think is a great deposit. You can see the silver and copper, as you know, like I'm bullish on copper, and silver kind of speaks for itself. I think more hits, more wide intervals, good grade. I think the market's going to start, directing its attention to it, because if Group 11 decides to sort of move the narrative any piece towards silver, that should grab people's attention, because a lot of the projects that we're seeing that are considered silver companies are very much lead and zinc focused too. So I think Ballywire is emerging as a new silver play. And this was my favorite part of the news release this week, hole 41, around 8 meters of oxidized massive sulfide. And it looks like it was oxidized because it was on a fault. The thought is if they vector out just to the sides of this fault, that they'll probably get into the massive sulfide. And me personally, I think that's probably going to be true. And so now you have that gravity high anomaly, you've got the calcite mineralization, then you've got the oxidized massive sulfide. And we'll see what that ends up equaling. But I think you've got a massive trend there of very good grade stuff. Surge Copper, around 72 million. I don't know what the share price was this morning, but it's probably around there. As I said earlier, about 2.25% price to NAV. Strategic ownership, African Rainbow Metals, who's primarily focused in Africa. They have a ton of cash, and they just increased their position to 19.9%. I think that's very indicative of where they might want to diversify in the future. And given what I see, Surge owns this basically district in central BC. I see every reason for them to make that leap. As most of you know, BC is mostly a good jurisdiction for mining. There is some risk, but that's on the First Nations and I think probably government side of things. If companies are taking the right steps in the relationship, I don't usually see any problem. It comes from mostly the other end. But the other part is you've got Berg, and then you have Otsa, which is, let's say, a 25 year mine life project. It's lower grade. So not really in the economics right now, but it's really that call option on copper. So you've got multi-decades worth of copper in resource, not even talking about the exploration upside, already in place. And they're only getting 2% of the value for Berg. So it doesn't even include Otsa. So this is calculations. They came up. This is, again, something that retail misses all the time, metallurgical improvements. When you stick this into the PEA, I get about a 2% improvement on IRR and about a 300 to 400 million % move up in NPV just with the metallurgical improvements. And you can see in the table, I've outlined basically what the differentials are. So this is what happens when you do a little bit more work on the met side. And then the last case scenario is basically with the met work at today's copper and molybdenum prices with a 15% uptick in CapEx. And that's how I get to the 2.25% of NAV, which I still think is conservative, considering how vanilla I think Berg is. Simple metallurgy, single pit, low strip, 30-year mine life. To me, it's super straightforward. And then this is a great comparison chart that I wish more companies sort of put in. This is a nice wide range of comparisons. You can see the companies with the higher valuations are the companies that have precious metals credits. And so rightfully so, that makes sense why they are being valued higher. But Surge's underlying value becomes very clear when you start going through these numbers and depending on what you like to see in projects. Field Notes is my YouTube video series. We just published episode 5, which takes me to the Toodoggone, which is Thesis Gold's Lawyers Ranch project. Phenomenal company, great project, around 5 million ounces gold equivalent. This area is going to get super hot. I suggest taking a look at the episode. Mining cycles create fortunes, timing and discipline decide who wins. Junior Stock Review Premium gives you the edge. Please visit juniorstockreview.com. Of course, if you have any questions, pull me aside. I'd be happy to answer them.